Well, welcome, Richard. Thank you so much for coming on the podcast. As we were talking earlier, I'm a big fan of what you have ultimately created at 1confirmation and big fan of what you've done on the Dune analytics side. I really enjoy your dashboard, so I appreciate you coming on the podcast.
Great. Thanks for having me on, Logan.
I would love to start with a little bit of your background. I always find everybody's background unique and their journey. The biggest thing that I find is the people that do ambitious things. Other people will often comment that you would obviously have done those things, but at the beginning, they're extremely non-obvious and often difficult choices. I asked you prior to the podcast if you worked in like the tech industry before joining one confirmation, and you said no. So I'd love to hear the story of how you just went straight into a fund and how you got into crypto.
Yeah, so I got into crypto around 2015. This was from doing research in cryptography, and through that, that's how I learned what Bitcoin, Ethereum, cryptocurrencies were for the first time, because it's kind of the most natural application of cryptography. And also co-founded the Stanford Blockchain Club. And that's how I really kind of got deep into crypto, inviting guest speakers, hosting events, and like learning a lot about this space. And I was also like consulting for a lot of, traditional, Silicon Valley venture funds about crypto. This is like around 2017, the last like bull market, because like they obviously get really interested when prices are going up. But it was just really hard to get them over the line when they're not crypto natives at the end of the day. So I wanted to, spend all my time in crypto, be at a crypto native fund. One confirmation was starting in 2017, joined up with Nick. And it's been about 5 years since.
That's amazing. I don't remember how, but somehow I got on the Stanford blockchain emailing list because I was always curious, like what type of speakers you guys were bringing in. But very cool that you started the club.
Yeah.
That's unique. So tell me a little bit more about kind of one confirmation and how you guys started the fund. I've recently kind of jumped through a lot of those hoops, setting up kind of your Delaware entity, setting up your US entity, being able to accept international dollars. Tell us like some of the hurdles that you and Nick face when starting one confirmation and how you guys kind of went about it.
Yeah, so we started as really one of the first crypto venture funds. Kind of all the funds that came before us were hedge funds that were like trading cryptocurrencies, managing liquid portfolios. But, we want to take a traditional Silicon Valley venture approach to like backing early stage teams and like partnering with them long term. In terms of setting up the venture fund, like admin stuff, there weren't major hurdles I could think of. Because it was structured like a traditional venture fund. You do have to be mindful of the RIA requirement. That's at the time our AUM was small enough that it didn't really matter. But basically what it is like if your AUM becomes big enough, in order to hold liquid tokens, you have to register as an RIA, and there comes a lot of compliance requirements. I do remember getting a bank partner was difficult at the time because it was only Silvergate, I think, and Signature Bank that were banking crypto at the time. SVB eventually banked crypto like a few years later. And there was like a long wait list of crypto funds that wanted to get started and like were waiting on an account on Silvergate.
Getting a bank account in crypto is surprisingly hard, but yeah, I was just curious about some of your challenges. So being one of the kind of first venture funds, was it just kind of with you and Nick kind of going back and forth on the idea that because this had not existed yet and you guys were kind of plugged into the ecosystem out in Silicon Valley and being in the Bay, that this was just like a natural thing that you wanted to do? I think to me, it's very impressive that you just went straight out of undergrad and just was like, hey, I can run this fund and I will do it very successfully. So I would love to like learn a little bit more about the mindset that you guys were in when you decided to start the fund.
Yeah, the reason we structure as venture, well, there's a couple reasons. So, first, I think the risk reward of crypto is very much like venture. Is like people make the mistake because these things are are liquid and like have ticker symbols that they should be traded. But really, it's like a lot of these projects, it's like either 100x or zero. And like that's kind of the risk reward you have in a venture portfolio where you make a lot of like contrarian and asymmetrical bets. A lot of them will go to zero. But if you hit an OpenSea, then you return your fund like many, many times over. And I guess the other reason is the problem we saw with hedge funds is there's a lot of misaligned incentives between GPs and LPs, especially during a bear market, because in hedge funds, you get paid carry annually. So in a bull market, the GPs, the investors, get paid a lot of carry because the fund is up a lot on paper. But then during a bear market, they lose their LPs' money, but there's no way to claw back the carry. So it's not a good incentive structure when the GPs have made a lot of money but have ended up losing their LPs' money when things come crashing down in a bear market. And a venture fund avoids that issue because you're paid your carry when you distribute money back to LPs. You're not paid carry annually.
Yeah, the two different fund structures are definitely interesting, and it's been super fascinating to me just watching kind of these new funds spin up, and even myself going through like a lot of these learning curves. It's not as sexy as people would like to think that it is. There's a lot of challenges.
Yeah, the biggest surprise, like I tell people, is like you probably spend like upwards to 50% of your time on fund admin, like stuff aside from investing, and that's always a big surprise for a lot of new managers.
Definitely. Maybe going a little bit forward, you mentioned OpenSea and how one big kind of investment in your for the firm can ultimately return kind of AUM multiple times over. Can you talk about a little bit about what you saw in like that 2018 or 2017 timeframe when you made that OpenSea investment, and what got you so excited about the OpenSea team?
Yeah, so it was April 2018. This was right when OpenSea was coming out of YC, the winter batch. I knew one of the co-founders, Alex Atala, from college. And this is also around the time, CryptoKitties was a big thing. NFTs was this new asset class. And it was like really obvious that there should be a marketplace for trading CryptoKitties and NFTs. And at the time, there were two main competitors. It was OpenSea and Rarebits. And the Rarebits team was a lot more polished and like had a better resume. Like they were ex-Zynga, ex-Farmville founders. They raised a lot more money from VCs than OpenSea. But what I liked about the OpenSea team is they were a lot more like nimble and scrappy, and they did a good job, hustling, like living inside of Discords, like understanding all these like new NFT projects and communities, getting them like listed quickly on OpenSea, and just like out executed Rarebits. And like that's why I really liked about the OpenSea founders, is like how quickly and crypto native they became, and like had a really unique perspective on navigating the NFT space. And like ultimately, Rarebits shut down in early 2020, and OpenSea is the company we know today.
Pretty wild story. I always, I mean, the teams, and even internally, what like I really strive to do is the number of iterations and how quickly you can do those iterations, and really being on the ground floor of the ecosystem. And I think if you can combine those two, iterate very quickly and kind of be plugged in, as you mentioned, it is a recipe for success. I also joined in the 2017 timeframe, but ultimately went the product route instead of the fund. But I think everybody, or a lot of people that did not leave the ecosystem during the 2018 kind of downturn and bear market of the past couple of years, were rewarded. Could you talk about, I mean, now that we're kind of experiencing that another bear market kind of 2018 type style in many regards, how would you describe kind of today and where we're at, and maybe even expand upon it in like the past year, and kind of how you and the 1confirmation team are thinking about it today?
Yeah, like how this bear market is different from 2018. I'd say this time around, there's like actually a lot of there's tangible products you can use. It's like 2018 bear market is like that was like after the whole ICO white paper fluff. Yeah. And then like during the bear market, like you had to like explain to the skeptics, oh, like these things are possible to build. But like now today, like there's actually like Uniswap that you can point to that like things that actually work and like have usage. I guess what's different this time as well is crypto is a lot more macro correlated. So you can argue that this bear market also has a large part to do with Fed increasing interest rates, tech stocks also doing poorly, and then crypto is just like even far further out on the risk curve. So I think as crypto gets more like institutional adoption, it just naturally becomes more like correlated with like the NASDAQ, for example.
Yeah, 2018 was funny. I mean, the fact that there were so many kind of ICOs back then, and a lot of like, I don't even think DAI was, or just kind of emerging.
Yeah. Maker was December 2017, and that was like single collateral DAI, which is called like Psy today, because MCD didn't happen until like DevCon 2019.
So you couldn't even really like hold stable coins or, well, there was Tether, but yeah, it was much different landscape today. And so I very much agree that today is much better in the sense that we actually have usable products that people can use and transact on chain that bring some amount of value.
And USDC, I think, was like end of 2018 that when USDC came out. So like DAI, like single collateral DAI preceded USDC.
Yeah. Wild times back then. Lots of funny stories from 2017, 2018. Going forward though, I mean, going back to kind of some of the things that you've been working at 1confirmation, you're very prolific in Dune analytics. Me and my product background I'm very much of an admirer of being able to look at analytics, see how much product adoption the whatever protocol is getting, seeing the number of users. Could you talk about why you got interested in Dune and how you kind of became kind of a pointed or trusted person in the ecosystem with the dashboards that you've created?
Yeah. So like prior to Dune, like I actually had to like build my own like website, analytics websites using like Etherscan's API. So I had to like build the whole infrastructure plumbing, and there's still a website I maintain today, nexustracker.io, which is the dashboard for Nexus Mutual. That was built before Dune existed. And then Dune came out like late 2019, and like it just like saved me a lot of time because they like decoded all of the on-chain like event logs into like really cleanly formatted like SQL tables. So it just like saved me a lot of time, and it was a really good product. So I began using it to like track KPIs for our portfolio companies as well as like ecosystem projects. And then I think ultimately it's just because like I was early to Dune, which is why like my dashboards went viral. Like not necessarily that they were like super amazing. Like OpenSea, for example, like I built the first OpenSea dashboard, which is why like that has like the number of stars it does today. But there's a lot more like Dune wizards now that have built like more like granular, like customized like OpenSea dashboards. But yeah, it was a good tool at the time, and like I was an early user.
Yeah, I mean, I think the combination of, I mean, again, being early, it's not necessarily easy to kind of identify products that are coming up, and then also kind of being prolific enough and kind of those skills to add value to the community. And so I think having those dashboards and seeing them kind of take on a life of their own has, I'm sure, been rewarding.
Yeah. I mean, I didn't even think that like Dune, like how big the community would grow to like where it is today, that Dune would host like a conference, DuneCon in Berlin. At the time, it was just like a really good product, a really good tool. And that's why I just like kind of used it without really thinking much.
I think my claim to fame with Dune is I just have @Logan
nice.
As my username, but have not gone into the weeds as much as I should have on the analytics dashboards, or at least creating them. I think one thing, two things that like I really enjoyed about your dashboards, specifically on the OpenSea side and also DeFi users over time, is just seeing user adoption. A lot of these protocols have had kind of either large volumes or a lot of TVL. But specifically, I'm very kind of one of the main reasons why I got super excited about Web3 was kind of opening kind of these financial primitives and like self-custody to the world. When you look at some of these dashboards, they still have very few users. So could you talk about kind of some of the things, one, like I think, or like some of your thoughts on like users and Web3 adoption, and then two, just other general KPIs that you and the team look at?
Yeah, I can talk about the DeFi users dashboard. That was actually inspired by the bet that Jimmy Song and Joe Lubin made in Consensus 2018, where Jimmy Song is a famous Bitcoin maximalist and said that there will be no Ethereum dApp that has more than 100,000 I think it's monthly
That's
active
funny.
users or something. So like I built that dashboard to track it. And I think like the lesson from that is like people underestimate exponential growth. Is like you can see back in 2018, 2019, there were probably like only maybe like 10,000 total addresses that have like used DeFi. But it was growing, like it was already having like a hockey stick like graph at the time. And then you have to like extrapolate that out, where if something's growing like double-digit % month over month, even though the y-axis is small, like that quickly like explodes and like balloons out really quickly. So like now we're at like 6.5 million unique addresses that have used DeFi, and that's still growing a lot. And this is also like in terms of like in terms of informing our investment thesis. Like we're a crypto native fund, and like our thesis has always been focused on like products that are selling to crypto natives in the crypto community. And a lot of traditional VCs like are kind of impatient with that thesis. They want to see like the killer app, the mainstream adoption. But my counter to that is it's better to sell to or build a product has a really like passionate early user base, and that the macro tailwinds are there and that community grows exponentially over time, versus like trying to cross the chasm too quickly, go mainstream, and then you get kind of these Fortune 500 companies that might be like lukewarm about using blockchain for their supply chain management. And like DeFi was a perfect example where it barely even existed in 2018, and like now even like politicians know what DeFi is.
Yeah, I do agree. It's been fascinating to, yeah, as you mentioned, only kind of a handful, couple tens of thousands or tens of thousands of wallets kind of at the beginning of the last bull market to these 6 million or so kind of DeFi users. What do you think is the biggest bottleneck to say 100 million users? Is it gas fees? Is it like the UX design? Is it just making the overall kind of onboarding experience from exchange to wallets easier? I'm curious to hear your thoughts.
So it's a little bit like all the above. I think UX is a big one. Like onboarding is still a really big one, because to use DeFi today, you have to have a self-custodied wallet. And there aren't aren't like 100 million people in the world who know how to go from fiat to like Coinbase and then to a self-custody wallet. So like the user onboarding experience has to be a lot better there. I'd say that's like one of the bigger reasons why.
Yeah, self-custody is a challenge. I'm optimistic some of these teams will figure it out, but to me that seems like the core ethos of a lot of what we're building, kind of regardless of which chain you build it on. And so I really hope that kind of the self-custody piece gets cracked in the near future.
Yeah.
So at 1confirmation, just being very early in the ecosystem, the team correctly kind of identified Ethereum building and investing in the Ethereum ecosystem. Could you talk about kind of that initial early thesis about like kind of investing in smart contracts, and then kind of your thoughts on Ethereum today and how it has kind of evolved over time?
Yeah. So, back then, like you had all these like next gen scalable blockchains that were popping up and like got funded by a lot of VCs. So like, names like, Thunder Token, Algorand, Oasis, Definity. There's like names that like were like super big and flashy back then, but now like are kind of an afterthought. And, what I like about Ethereum is kind of the culture and ethos. And like, it really starts at the top where, Vitalik is like, I like how he's like kind of autistic and like doesn't care about like greed and money, but just like is truly passionate about building like decentralized tech. And like that like culture set from the top permeates down, where you have a community of builders who actually care about what they're building and like the culture of decentralization, why it matters, versus getting rich quick, which I see in a lot of like other L1s where it's like a narrative that's like propped up by their like VCs and backers. And when a bear market hits, they wash out, they pivot to building on other chains, or they just go back to their like cushy big tech jobs.
Yeah, I definitely appreciate Ethereum and their community for carrying that ethos and really focusing kind of on decentralization. It was interesting kind of at that point in time. I mean, how Ethereum kind of did their ICO in the sense that today, even if a newer blockchain wanted to do that, they wouldn't be able to replicate that from a legal standpoint.
Yeah, it's just kind of the benefit that they got grandfathered in, that they did an ICO in 2014, which like, may or may not have been a security. It was like pretty like legal gray area. But now like it's like the SEC has like definitively said that like Bitcoin and Ethereum are like sufficiently decentralized.
Yeah, they got a lot of benefits from being first, and I would say that still carries with them today. So you guys were, fairly early to the Ethereum ecosystem. You invested heavily kind of as you started the fund and continued to do so after the 2018, 2019 bear market. Has your thoughts in general on like the Ethereum ecosystem, like have you grown fonder of Ethereum? Has some of your views changed with like the last cycle with like gas fees? I'm curious to hear your thoughts on how
I'm still like
kind of
bullish,
shifted.
like grown more fond of like Ethereum. Gas fees like made it clear that not everything can be on mainnet. Why we're going to have side chains, rollups, and like you kind of pick your trade-off based on fees, convenience, and security. So like if you care less about security, but say you're doing like an NFT mint where you're just minting a bunch of cheap stuff, like for a game, for example, then you can build on Polygon where security probably doesn't matter as much, but it's like super cheap. Versus building on a rollup if you're like a DeFi app that needs to care about gas, but security still matters because you got hundreds of millions in TVL. So that's what I like about Ethereum is there's a lot of different teams working on scalability solutions, and like they're kind of exploring like different ends of the spectrum in terms of the trade-off space.
Yeah. Are there any layer twos specifically that you think have better trade-offs, whether like Optimistic or ZK or Polygon, Arbitrum? Are any in particular that you think are doing things uniquely well in the Ethereum ecosystem?
So like my thesis on like layer twos, I think optimistic rollups is like a short-term solution for ZK rollups. And like the analogy I like to use is like optimistic rollups is like adding an extra lane on the highway, where in the short term you solve the traffic bottleneck problem, but like very quickly drivers like figure out how to use the extra lane, and it doesn't solve the traffic problem in the long run, because it's optimistic rollup is only a linear improvement to the gas cost problem that's growing exponentially. So you need something more 0 to 1, and that's what ZK rollups are. It's kind of like flying cars, or like maybe like I think Elon Musk's like Boring Company, for example, like one of those things where it's something that didn't exist before and like can solve the gas cost problem exponentially. And like the issue with ZK rollups is right now is like a lot of this like ZK cryptography like works in theory, but in practice, actually implementing the sequencer or implementing like the prover is like the big bottleneck. And that's why like TPS is still really slow, because people haven't figured out how to like code ZK circuits and like have them like run really efficiently. And like I think that's going to be like a multi-year process of like R&D and optimization. But that's where I think a lot of the most like cutting edge research with regards to crypto is happening right now, like in the ZK space. And there's we've come a long way since like 2019, and like the space of like ZK stuff has improved significantly since.
Yeah, the zero knowledge flavors of rollups are fascinating, and they're definitely a deep rabbit hole in themselves, particularly on the ZK rollups. Why do you, in your words, like think they're so like such a leap from like the optimistic rollups? Is it the privacy aspect, or is it the better data compression?
Yeah. So like one benefit with ZK rollups is you can have like recursion in terms of ZK proofs. So not only can you have like L2s, ZK rollups that like write a proof to L1, you could have like L3s, say like the L2 becomes like bottleneck scalability wise. Then you can have an L3 that like writes a proof to L2, and the L2 aggregates all the proofs and then writes a single proof down to L1. So like kind of the scalability space like becomes exponential. And like you see other like monolithic L1s like Solana like realizing this, that like kind of the only way to scale even more is just you have to like verticalize. And like that's why there's like L2 projects building on Solana, because once you have like aggregate proofs, that's like the best way to scale. And also in terms of privacy, like that would be a ZK rollup, like a zero knowledge rollup. And like that's another cool feature. I think the zero knowledge teams are more focused on like the scalability and like implementing the provers and sequencers before they think about privacy. But actually, there are privacy rollups like Aztec that are more privacy focused.
So with layer 2s and layer 3s, one of the biggest kind of critiques of them and kind of a like talking point of like more monolithic chains like Solana is that you can have atomic composability in a single state. Going back to kind of what kicked off DeFi summer was this composability nature. How do you think about composability in like a roll-up type world with L2s and L3s?
Yeah, well, you can build on the same roll-up as, say, like the roll-up that has Compound, for example. And a lot of like composability acts, like atomic composability comes from the MEV space. I argue like that's where composability matters more. And even if you break that, MEV searchers they're still going to like do the arbitrage. It's just it's like not risk free anymore because their transaction could fail like halfway through, and like that's how centralized exchange arbitrage has happened for a long time. And even if you look at like Ethereum composability, a lot of that is in the form of like I call them like IOU tokens, and like Urine was a really good example in like DeFi Summer 2020, where they would take a token like say like a Curve or like a Balancer LP token, and just like start adding a bunch of prefixes as they add like more layers of abstraction on top of that, and like you can take those tokens and like bridge them across different rollups, and it's just an IOU for wherever like the assets are stored. So like in that sense, it doesn't break composability as long as you have these like IOU tokens that represent a claim on your LP position, for example. You don't need to like have to LP and then do all this other stuff in like a single transaction.
Gotcha. Yeah, I'm fascinated to kind of watch this play out and see how it unfolds. I do think the whole design space of layer ones is fascinating to me, and it's definitely something that I follow closely. I saw that the 1confirmation team is also at least semi-active in kind of Polkadot and Cosmos. Could you share some of the thesis around those two ecosystems as well?
Yeah, Polkadot is really a bet on governance. So the way Ethereum and like every other chain has done governance to date is through like benevolent dictatorship and hard forks. Is kind of the core devs like kind of decide on what's going to happen. Vitalik obviously like can sway things, and then it just like comes down to a hard fork. And sometimes those can be like contentious, like 1559. But Polkadot is different in terms like they have the council, and you can upgrade the network through a governance process that's baked in to the protocol itself, rather than having to like hard fork the chain for every new protocol upgrade. So it was a bet that like that's a 0-to-1 improvement for Polkadot. And then for Cosmos, we've been invested in Cosmos since 2018, like the ecosystem. And that's like kind of a bet on the app chain thesis that as dApps kind of graduate from their building on a monolithic L1, they want more control over the sequencer. They want more control over gas fees. They want value accrual for their token. And like those are drivers for like wanting to build on their own chain. And DYDX is like kind of the pioneer in that. There's a lot of projects that are also like migrating, like looking at like building an app chain on Cosmos as well. And what I also like about the Cosmos ecosystem is I'd say like the most similar to Ethereum in terms of culture, of like a group of people who are like really passionate about the tech and the ethos of decentralization, rather than they can make a lot of money from it. And like, the reason why like Cosmos didn't pump like other L1s in the last bull market is because they don't have like a demagogue leader who can like really, really shill the chain and like kind of market it to retail. But like at the same time, like those types of leaders like tend to like fall the quickest when things go bad in a bear market. Yeah,
two things. I did a podcast with Antonio from DYDX, and fantastic what he's built with DYDX, but I was super fascinated kind of following their specific journey, going from like a ZK tech to ultimately deciding to go to the app chain on Cosmos, and found that super fascinating. And then, the Cosmos ecosystem, I would agree, like they're very heavily focused on that ethos. I think sometimes the memes and narratives are good. I don't think that has to come from like a dictator per se, but I think Ethereum particularly is very good at memes, especially with like EIP 1559. I think it's 4844, like proto sharding. What do you think for like these ecosystems? How can they be better at like memes or just sharing kind of some of these cultures so that other people can get as excited about
them? Maybe you should like, I don't know, post more on 4chan. I don't know. I'm not an expert at like memes and
meme culture.
I say just like authenticity matters at the end of the day. Is like, I like to think like memes and narratives are fleeting, and like they can come and go. But at the end of the day, like if you don't have like a good community that's here for the long term, if you don't have a good product, then like it gets exposed over the long term. And there are a lot of memes that like were really big like years ago that like we don't even think about today. Like the Link Marines, for example, is like that started in like summer of 2019 when like Google had like a quote unquote partnership with Chainlink. And that went like
meta.
super viral for like a year or two. And then like nowadays, like no one talks about the Link Marines. So it's better to invest in like authenticity and products rather than like chasing like the super hot meme narrative.
Definitely. So there's many narratives for this last bull cycle. One of them being Sol, Luna, AVAX. Luna obviously imploded, kind of had extremely bad tokenomics or design, if you will. But Avalanche and Solana are still around. What are your general thoughts on those ecosystems? Do you not feel like they have like a native community, or is it just the design that you're not particularly interested
I think
in?
like the culture ultimately is like driven a lot by greed in like both of those communities. And you see this now actually with both, where there's a lot of projects I know and like taking pitches that are like pivoting out of Solana. They're like building on other chains because it's like no longer the sexy narrative to be building on Solana. And they also have to be pragmatic and like go where the users are. And I just like, they also had the issue where like during the bull market, a lot of it was like Solana was propped up by Alameda. Their TVL was propped up by Alameda, and likewise Avalanche by Three Arrows. And maybe I have the benefit of like being an insider and like knowing like the fraud that's like behind the scenes. But like all of this comes crashing down and gets exposed like during a bear market. So you kind of have to like think straight during a bull market. Don't like cloud your judgment because like numbers going up.
Yeah, I definitely agree. It's very easy to get distracted in bull markets. And there's definitely a lot of shiny objects. I like the different, I think their ecosystems are interesting, both of them. Solana, I'm particularly interested in. I personally like their scaling solution. I think they have a lot of kind of unique properties. And going back to the analytics, I've been super fascinated just by active addresses, because going back to, again, like my whole thing has been like how to actually get like users. I wish there was a better metric than active addresses, but yeah, it's Solana uniquely has like continuously high like active addresses, which has been interesting. But yeah, there were a lot of bad actors in kind of both of those ecosystems. Personally, I'm hoping that this is kind of Ethereum or Solana's moment from like similar to 2018 with ETH, where it was like 1400 to 80. That was a crazy drop. And Solana's, even had a meteoric rise from like 240 now to got down to 8, which was pretty wild. But definitely interesting to watch those ecosystems develop. But yeah, I think it's all fascinating. So are you tracking any layer 2 metrics with like your Dune dashboards?
Yeah, I haven't made any layer 2 dashboards to my knowledge. There are a lot of other dashboards I track. A good one is there's a dashboard on like how much gas is spent on each layer 2 writing their proofs to L1s. And like that's a good proxy for like how much like activity there is on those L2s. And also for each dApp that like deploys on their L2s, it's interesting to like track like say Uniswap, for example, or OpenSea on like Arbitrum, Optimism, and seeing like where like which L2s get more traction than others. So I do track like metrics on a dApp level and also like on the chain level as well.
I think the last I saw, the at least overall percentage of Ethereum block space being used for L2s was like 2 or 3%, but growing.
And maybe you can argue like in the long term, like Ethereum will L1 just turns into a settlement layer where like the majority of block space is for L2 settlements or stuff that's like really needs to be secure and like has to be done on L1, like I know centralized exchanges like doing transfers, for example. That's kind of where I see the future of Ethereum going, just like vertical integration.
Yeah, It will definitely be an interesting space to watch. You recently wrote kind of some of your closing thoughts for 2023. One of those being MEV that we touched upon earlier. And L2s, what do you think is kind of like the end game for L2s and MEV, since a lot of Ethereum's traffic specifically over the long term will move, or ideally move, to L2s to have those lower gas
I think
fees?
that's going to be a big business model for L2s is controlling the sequencer. And sequencer is basically the ordering of transactions. And why that's important is like MEV bots, say they're doing like front running, sandwiching, or like arbitrage or back running. They want their MEV, their ARB transaction inserted in a certain particular order with whatever Oracle update or whatever user transaction is happening. And they're willing to pay a lot of money, basically like maybe like even up to like 95, 100% of their MEV profits just for the right to do so, because it's like strictly in their self-interest to pay up all that potential profits if at the end of the day they're still like making some money. Like in the post I wrote, like I have a graph on like kind of the TAM of MEV and like how much revenue is like profits is like being made every month. And like that's only a lower bound. Like the actual amount of profits could be like many, many times higher. It's just we don't know how to track all those. And I think that's going to be like a significant source of revenue for dApps and L2s, like dApps that are on their own custom rollups or side chains or like L2 if they're built on a generalized L2. So that's I think is going to be the biggest reason why dApps want to migrate to their own chains or rollups.
In that world, and kind of as you laid out, if that world exists, do you envision multiple sequencers? Do you envision one sequencer? How do you, I guess, like keeping the decentralization ethos that the community of Ethereum holds? How do you also work with like the sequencer decentralization?
Yeah, I think it's going to be like kind of Flashbot style, where like there's like one sequencer, or it's like kind of one channel, if you will. And you have to like auction off the right to participate in that. So like, Arbitrum is going to have their own sequencer, but if you want to be on your own rollup, then you can like fork Arbitrum and like build on your Arbitrum fork, and then have your own sequencer there. In that case, like the application would capture 100% of the MEV profits. It doesn't go all to the base layer.
I see. Very interesting. And kind of same with L3s.
Yeah, like with each sequencer, that's like a chance to like auction off MEV privileges.
That makes sense. The other things that you touched upon more broadly was ENS. I was not lucky enough, or a little bit late to kind of the ENS game, and unfortunately was not able to get Logan.eth. But I would love to kind of hear a little bit more of your comments on why you're excited in 2023 for just the Ethereum.
Yeah, that was also like informed by Dune, and ENS is like kind of the big elephant in the room where no one really talks about it because it's not as sexy as like a monkey JPEG. But if you look at their KPIs, like they're the 10th most called smart contract on Ethereum, which is pretty crazy. It's like right there with Seaport, OpenSea, Uniswap, Tether, USDC, like kind of these titans, and then it's like ENS. And they're also like the most widely distributed NFT project by far. There's like 600,000 addresses that own an ENS, and like in second place is like 100,000. So it's like by a pretty big margin. I think like also another thing about ENS that's people on the outside don't realize is like there's two communities. There's like the 999 club and the 10K club, which are like 3 and 4 digit ENS names. And those are like the PFPs of ENS. And those communities are getting really excited. I think when like Web3 social grows, like those will become like really desirable forms of identity that like no one's really talking about right now.
Yeah, I'm super curious about social as well, and how that unfolds in kind of a decentralized world. What is kind of your vision for decentralized social
like
media?
token gated communities is like one killer feature. And like, we're invested in Farcaster, by the way. And like what you can, like, when you link a wallet to your like social media account, then you can like have like communities based on like which NFTs you hold, which tokens you hold. And, that's something you can do that like you can't do on Twitter, for example. And then there's a lot of projects that are trying to build like, discords for like PFP projects. But I think that's like the wrong approach to take. I think it's better to start as like a social media and then add that feature rather than like trying to go directly as like a Discord for this particular project.
Yeah, I'm waiting for a social media application to like natively take off, and what form that ultimately looks like. I think it'll definitely be exciting to have that come to fruition. One of the other things that you were looking forward to was the generative art space. I'm curious your thoughts around generative art. Do you have like similar vibes to like 2018 with OpenSea? Like what gets you so excited?
Yeah, I think
about
it's like, the way to summarize it, it's a flight to safety from PFPs. Is like these PFPs were like kind of random art collections created by someone that you paid like a contractor on Fiverr to like make this, and they probably don't give a shit about NFTs. But like you can argue that generative art is like higher quality PFPs created by artists who actually care about like the NFT space in the long run. And you can see this empirically, where like in like the NFT bear market, the stuff that's performed the best in terms of like holding their value are one-of-one art from Super Rare, because it has the Lindy effect of like being minted in 2018, and generative art. And I actually put CryptoPunks in the generative art category because it's like a critical component to Ethereum culture of like being the very first NFT project back in 2017. I also say like generative art has the benefit of like being the easiest thing to like cross the chasm with the traditional art institutions and like the traditional art world. And I think some of those pieces will be like the first pieces that get curated in like galleries like the MoMA and others. And like when that happens, then it becomes a kind of defining moment in like art history. And like that's what you'll be reading about in like art history textbooks in like the next several decades from now. And yeah, I say in general, you want to like, as an NFT project, you want to become a store of value, like where ETH whales and like people who have like a lot of money outside of crypto decide to like diversify and park their money. And for a long time, like that's been art. And that's why I think generative art, which is like uniquely crypto native, is the best form to manifest that versus just kind of these JPEGs that are more for traders.
Yeah, the art market definitely became a fascinating kind of story. I think for me personally, I was not as early as you and Nick to NFTs, and I was not super surprised by DeFi summer, but I was definitely more surprised by kind of how prolific NFTs became kind of at 2020, at the beginning of 2021, and how much of a cultural movement it became. And so the PFP area, the generative art, it was all fascinating to watch it unfold in real time. It really took on
the
life
phrase I
of its
like
own.
to use is like DeFi is crypto for elites and NFTs is crypto for normies. And I think people kind of underestimated how like everyday people like just intuitively understand like an NFT way more than they do like with like AMMs, bonding curves, and permanent loss. There's like too much vocabulary for them to get up to speed with, but they can understand like, buying a collectible, a souvenir, and a piece of artwork like on the blockchain. And I think also like right now, the total market cap of crypto art is only like 0.5, around 0.5% of the total market cap of cryptocurrencies. And I think that like pie chart is going to shift significantly over time, because the total addressable market of culture of like just non-fungible assets is like way bigger than that. And I think NFTs is going to disrupt like every single vertical of culture, whether that's like music or like gaming or whatnot, like in some significant way.
Yeah, let's go into that. So with music and gaming, that kind of started to be more spoken about towards the end of the last year. Could you talk about some of your thoughts around both of those and how you see them evolving?
So music, it's kind of going back full circle, where, back in the 90s, before streaming, way artists make money is like from selling individual records. And then like the streaming model completely disrupted that. You make money based on streams because like music is easily pirated and like free. And then now you're kind of going back full circle, where it's like more of the patronage model, where an artist can have like 1,000 true fans. It's like, yes, their music is available for anyone to listen to for free, but like the 1,000 true fans will like want to buy the NFT, and artists will make way more. Like there's tons of examples of like artists like Blau and RIC explaining how like they've made way more money from their like couple of true fans than they have like from all of their Spotify streaming revenue. And I think that's going to be the business model for artists going forward, is not streaming or touring, but like the true patronage model.
I was watching RIC and a big fan of his tweets, and then started to follow his music because of it, but was always extremely fascinated how he was able to leverage NFTs and, as you mentioned, kind of gain a lot of, be able to capture on some of his audience's enthusiasm for his music because of it. And so it was definitely interesting to watch.
And it's also it's a way for musicians to get started without having to be tied to like onerous contracts with record labels and management companies, where you basically sell almost all of your future profits because you're like desperate at the time and like you need a place to get started. And it's just like really difficult to like negotiate out of those contracts like down the road. So I think music NFTs is like kind of the very tip of the iceberg for like what SoundCloud like tried to do, is like be a platform for new music discovery from indie artists. But this time with NFTs, those artists can actually like make a living doing so.
Definitely. And what are your thoughts around kind of gaming and gaming
I
NFTs?
think NFTs for gaming, it's more of like a feature. And like at the end of the day, like first and foremost, you need to be building a fun game. And I think that's the mistake a lot of crypto gaming projects I've seen make, is they think like tokenomics and NFTs will like kind of band-aid the fact that like the game isn't fun to play. And like we're now realizing this, that like first and foremost, like crypto developers are not game developers. And it's so hard in the traditional gaming world to build a AAA game, to build a game that's going to be played in like over many years, rather than just like something that's viral for a couple months and then dies. So I think that's going to be the challenge, like first and foremost. Yeah,
it has to be fun. And yeah, I do think, just because so few users actually exist, or active addresses on these ecosystems still today more broadly, that a single game or even single artist could essentially double it, the number of active users, if you have kind of the correct formula. So I'm excited again to see more active users being brought into the ecosystem and whatever.
Yeah, and we've seen this in the past where like Polygon was an example where there's like this like random flower game that like spammed the entire network, just like through like a bunch of transactions, and like there like a ton of activity. And this is also like ties into like a critique I have of like monolithic chains, is dApps will like grow and learn how to use up all the available block space. So even if you can do like 1 million TPS per second, dApps will think, okay, well, transactions are cheap. Rather than like batching 10 different transactions into one, I'll just like spam those 10 transactions and like quickly use up all the available like block space. So you can think of a game where like, say some like MMORPG game where like to like kind of click on a map or like move your character, like that requires a transaction. And like if you design your infrastructure like that, then like, yeah, very quickly you can use up the entire block space, which is why I'm much more bullish on like the modular architecture of chains through either app specific chains or like through L2s, L3s.
Yeah. And is it just because the data compression with L2s, or like with app chains just having like
with the app chain,
apps?
Like you're not competing
or
for
like
like resources with other applications. So like Uniswap users don't have to get angry about like gas prices because this like random flower game is like using up all the block space.
I've studied the different architectures a lot. I have a little bit different opinion, but it is an interesting design space. I do think ultimately, in my point of view, I mean, whether you do like a app chain or single L2, you still have to like solve for the hotspot contention. And if you can isolate those specific hotspots with like specific fees per contract, that becomes super interesting to me, because then you're not necessarily fighting for resource contention. At the end of the day, it's just about the bandwidth that the nodes have and how much you can actually propagate data to. And so I would frame it a little bit differently, but I think it will definitely be interesting to watch.
Interesting.
I mean, I really started, one of the reasons why I started the podcast is because I find all the different architectures interesting. Avalanche, I find interesting. So I was actually at one more point in time, much more of an Ethereum maxi, definitely during like 2018, 2019. And personally, I just became saddened by the state of Ethereum towards this bull market, just because I paid like $1,000 for a Uniswap. And I mean, I did that because like I was getting more value from the chain to do it. But even the fact that like it was still $1,000 just made me sad. And so I personally started looking at different chains and their architectures, and being from in my past life, being at Tesla, kind of being able to break things down from their first principles and do kind of first principles analysis of each of these chains, I started to try to apply that to blockchains. And the reason why I wanted to do the podcast is just talk to different people and their thesis on why they're building things that they are. And I found a lot of different nuanced answers from like the Mist and Labs teams, from the Avalanche team, talking with Zaki from the Cosmos ecosystem, even Arbitrum. They're all like very small nuances, but I find them interesting in the fact that what they're trying to achieve and how they do it. So I'd
say like one thing is like, we spend a lot of time talking about like different architectures, like really getting into like the technical weeds, but I mentioned this a little bit before, but I think culture and like ethos is like really underrated, and like people don't ever talk about that as the reason why a chain ultimately succeeds. And it's mainly because it's hard to quantify. It's like kind of this fuzzy thing that you just kind of have to have like a good gut feel for. But yeah, I think that's like why Ethereum continues to be Lindy.
Ethereum, I mean, it's funny, like, I think Solana, in my opinion, is really going through the exact same thing that Ethereum went through in 2018. I mean, going back to that point in time, like all the Bitcoin maxis were kind of dancing on Ethereum's supposedly grave. We're saying that ICO, the only thing that ETH could do was ICOs, and it was never coming back. And it was really those like core believers that stuck around and ultimately built on Ethereum and the applications that made it is what it is today. And personally, I feel like Solana is kind of going through similar things where and Solana equivalent, their ICO actors are essentially being washed out, and the core community is still remaining and building. But yeah, the culture is extremely important, no matter what technology that you do choose on, whether it's an L1 or app chain or L2. Building that and bootstrapping that, I do think, is even a more challenging problem than the technical aspects itself. And I wish there was a better way to quantify it. And that's why I just look at active addresses as kind of a metric or proxy to see the growth of the network.
But I guess it helps to kind of have the benefit of being investing for like 5 years and like being able to pattern match like what's happening now with like what's happened in like 2018, and like seeing parallels with next gen scalable chains that popped up in like 2018 were super hot, but then like kind of fizzled out. And like all the professor coins. Yeah. No, I mean, I remember there were a ton of like professor. I like to call them professor coins because they like were research papers that could do like 1 million TPS plus like privacy and like all this stuff, quantum resistant. But like never went anywhere because just like there was no culture.
Yeah, there's a large difference between a white paper and then mainnet, and then mainnet and a vibrant ecosystem. I definitely agree. So it is fascinating to watch. I think you and I are both aligned that ultimately we want people to use this technology. I think this is the most fascinating space in all of tech, to be honest. And that's why I'm excited to be in it. I just hope to see more users in these different chains. Because I want adoption. Adoption is important. But no, I really do appreciate your time, Richard. Thank you so much for coming on the podcast. Again, a really big fan of your Dune analytics dashboards and what you've created there. I hope you continue to add additional dashboards to your repertoire for all of us to enjoy. But yeah, really appreciate your time. Appreciate you sharing your insights. And
great. Thanks for having me on, Logan.